What's up, everybody? Welcome back to Sales Remastered. My name is Daniel. I'm your host. And in this episode, I'm going to dedicate to a very loyal follower. Found me on social media. Very small world, because even though I work for a national size outfit, we happen to actually work for the same company. He just happens to work for our Florida area. And so it's crazy because, man, this is just perfect case in point. My content is reaching people that are on the other side of the country, and no affiliation. Like, I didn't know his name, and his name's Jose. Jose, if you're watching, this one's for you. Appreciate the support, bro. And he's just always been there, always putting in the comments, always making sure he likes the video, shares the video. And I'm fortunate, I'm blessed, because I understand that he has found value here in the content. And so I'm gonna do you one solid, Jose, and I'm gonna answer your question. Jose had a question where sometimes he gets referred clients. He's an outside loan agent, and he gets referred clients that may have went through the process elsewhere, and maybe with a less experienced loan officer, or maybe with a company who had too much yellow tape, meaning they weren't as lenient on the guidelines as my company is. You see, my company being the third largest company, mortgage lender in the country, we have a solid relationship with the entities that provide the sponsoring or the lending, which is Fannie Mae, Freddie Mac, VA, and FHA. And so what I wanted to do was just explain to you that at the end of the day, that's really what it comes down to. It comes down to Fannie Mae, Freddie Mac, VA, and FHA. And when we bear it down to the bare essentials, there's no real other sponsor. Well, I'll call them sponsor, but actually they're entities, right? And they're the governing lending entities that back up most of the mortgages. And so if someone went to your lender for a VA, or they went to my lender for a VA, at the end of the day, we both go to VA. Makes sense? Same thing with FHA, same thing with conventional. And it's always important to kind of drop those seeds inside your delivery, inside your pitch. And so, for example, how I kind of slip that in is I let them know, and I kind of downplay it at the same time. I say, well, the only reason why you would even work with me is because my relationship with these entities, Fannie Mae, Freddie Mac, VA, or FHA, whichever one applies to that particular prospect. And ultimately what you do is you leverage my relationship with these entities to get you a clear channel, with less yellow tape, no broker fees, no broker points, things like that. And if I can help you cross that bridge, then I'll show you how to get to that other side. I'll show you to get, to your funding much faster. And I think that Jose's issue was that when he gets recommended some prospects who may have been declined, or they went through that process, and the prospect is now pushing back, like, oh man, I don't want to start over, or oh man, I don't want to go through the whole application process again. And that's their that's a prospect's mindset going in. And it's something that I can relate to, something that I've been doing. I established the retention team. Retention team is basically those calling out on clients of our own portfolio who may have started the process elsewhere, or maybe a lender ordered a payoff on one of our portfolio loans, and so we go ahead and try to retain them, hence retention. And that process usually happens like when they first hear from me or my team. Usually they're signing within a week, so they've been through the process, like they're done. They've gone about 30 days into the process. And my team, along myself, we've been very successful with luring them back, with retaining them, right? And of course we come across the same objections, like, oh man, Daniel, I'm supposed to be closing in 3 days, or I'm closing this weekend, I don't want to restart it, I don't want to do it all over again. And so that was always a challenge going in at first, until it wasn't, right? And so the reason why I bring up those entities like Fannie Mae, Freddie Mac, VA, FHA, is because when you understand that your prospect has gone through that process, or is already going through that process, what you're doing is you're starting to plant seeds and be like, oh, well, it looks like you're already done, so it's just a matter of us jumping in and taking you the rest of the way, or taking over. And what I like to do is really narrow it down, because if you consider that most of our competitors will go through a 1003 application as kind of like an interrogation, right? And I hear it all the time. So, I would be confident that the prospect was working with someone who was not as skilled as I am, or not as experienced as I am, right? And I would understand that they would probably go through the certain questions in a specific way. In a specific way, I'm talking about they're more qualifying than helping. And there's just a different tone, there's a different energy, a different vibe when you're actually trying to help. And I know as an advantage, that's my strategy, because it's different, right? And so what I like to do is find out what the results are. And so if they're working with a lender, I'd ask them key questions, and like, okay, well, may I ask why you secured them for your financial needs rather than us? Because we ultimately go to the same destination. Again, Fannie Mae, Freddie Mac, VA, FHA, whichever one applies. And then I'll find out, like, the client really liked the pricing. The client really liked the name brand, because all of their checking and savings are with them. Or maybe it's because they know a family member who works for that company. And the upside is, though, and why I think a lot of agents actually probably don't actually venture down this path of doing retention, is because those agents are already figuring out, like, oh, well, they're already in process. They're probably not going to want to go with me. They're already done. You know what I mean? Like, they're already sold. They already paid for an appraisal, whatever excuse. And when we tell ourselves that, it actually deflates our motivation. It deteriorates our hunger for it, because we've convinced ourselves already that they're not going to buy. We convinced ourselves already that it's not justified. And you have to be confident going in and saying, almost like, like you're telling a friend, like, whoa, you bought it there, right? Like, no, don't buy it there, buy it here. Like, you ever have a friend tell you that? Like, you bought something, like whether it's a clothes, shirt, or a fucking spinner, whatever, and they're like, where did you get it? How much did you pay? What? Bro, I got the hookup for you, right? Like, check this place out. And then, it just blew your mind. You're like, oh man, I feel dumb for buying it over here. You almost have to transfer that type of emotion. And when you're able to do that, and you actually hear them with a slight interest of, like, well, what can you do? What can you get? You already have an advantage, because you understand what the bottom line is. It's not like you're dealing with an internet lead, right? It's not like it could have been, but it's not like you're dealing with it right at the very beginning. At the beginning, meaning that they're just shopping, like they're just starting their discovery, like they got to compare still to like 9 or 4 different companies. And so we have this handicap, we have this advantage of, like, okay, well, you're already in the process. I know you're qualified, I imagine, because you're about to sign next week. Or I know you're already in the mindset or the momentum of getting this process done, because you've already compiled all your documents. You've already, accepted that an appraisal has to be paid for or has to be done. And so, of course, it's going to depend on where in the process they are. But my recommendation in terms of taking their interest and convincing them that, it's the process is worth starting over again, is just by the wordplay you use. The wordplay of saying, oh no, yeah, it's super simple. Since I'm a direct servicer for Fannie Mae, Freddie Mac, VA, FHA. It's actually super simple. I have access to their underwriting system that can tell me immediately what you qualify for. And it's true, right? Because it's the AUS. And because of my relationship with these entities, I can assure that, I can tell you what you qualify for. I could tell you exactly what I could do for you. And so really what it comes down to is you have a decision where you could buy your water, from the grocery store. You could buy your water from a retail outfit like Nordstrom's or Bloomingdale's. Ultimately, it's the same product, but you're going to pay extra from going through a retail channel. And so where I help you is I show you how to get that water at a far lower cost. I show you how to get even better water, meaning that I'm going to show you how to get this done correctly so that you're protected for years to come. You are going to get this done correctly so that you have me in your corner in ensuring that, anytime the market improves and you have the ability to improve your existing term, I'm automatically going to be in touch with you, because that's just what my company does. That's a signature service that only my company offers. and we'll cover that if I can help you. But let me make sure at least you're in the right path, because I'd hate for you to be spending a lot of time in this direction, regardless if it's with me or that other lender, just to find out that you don't actually qualify. And here's how I'm able to do that, is because, again, I'm a direct conduit to the source, Fannie Mae, Freddie Mac, FHA, VA, whichever one applies. I can tell you if there's an actual bridge across. And what I see too often are homeowners call me after 2 or 3 attempts to try to get qualified, and they bought 2 or 3 different appraisals, and a lot of times they should have never even bought one. So at the absolute bare minimum, if there's anything that I could do, is I could show you that there's a bridge to cross. There's something to stand on in the path that you're headed down. And it's not a dead end. It's not, wasted money on an appraisal. And so that's what I could do for you. In the process of, I'd like to show you how different our pricing is. It's super simple. I'm just going to verify that you have all the right components. And step back here, because I'm talking to you now. So what we have to realize, that prospect, whether they qualify or not, whether they are about to sign or not, they kind of already are on that path. And that is the lowest hanging fruit, because we already know that they're moving. We already know that they're in the checkout line. Like, they're going to buy, and all we got to do is step in and kind of just be the savior. And so I invite you to do that, where it's almost, you at the end of the day, you should be doing that to any prospect. You should always remind them how easy it is with you. You should always, just like you should always agree with them, you should never disagree with them. You want to do more validation than correction, if that makes sense. You want to validate their needs. You want to validate the way they feel. You want to validate why they thought it was good to go with the other company. Whereas when we try to correct and convince, we're actually trying to tell them that they made the wrong choice. And people don't like to admit that they're wrong. So you have to almost validate and then fascinate, right? So you validate that, oh yeah, you know what, a lot of people go with their servicer or go with their current company, but what happens is they actually close the window on all the other entities that can get it better or at a lower price than what your servicer can get it for example, myself. And I'm going to show you what I mean. So when I release this information out to your email, you can actually look at it side by side with the estimate you have in place right now. And because my information is accurate with our underwriting system, it's going to show you what you qualify for today. And so if I could show you better numbers, then it's completely your choice of which you would like to commit yourself to, the better term or the term you have in place now. And that type of wording is what kind of phrases them as like, oh, okay, well, shit, if you got better, let me see what you can do better. And if they're worried about time, they're worried about a 2-week or 3-week difference, you just have to kind of dummy it down and remind them and say, no, I completely understand. You're almost at the end of your process, and there's nothing more I'm sure that you want than to just kind of put it behind you. But at the end of the day, by kind of just sweeping it under the rug, you're not helping protect yourself for the long term. And so if I could show you even a term, if it's even just a slightly bit better, whether you need that difference or not right now, is your choice, but it's nice to have that option and have that difference and that extra, year, 2, 3, 4, 5 years from now, when you really do need it. Or if you really do need it right now, then utilize that and take advantage of a servicer that's always going to be there. We're more focused on taking care of you, not just qualifying you for a number. And I'm sure you can experience it, or you get this in just speaking with me right now, because I'm not trying to qualify you, I'm trying to help you. Makes sense? And so if you keep that type of mentality or that mindset going in, I think that they can read, they can sense through your energy and your tonality that you genuinely are interested in helping them, not qualifying them. Got it? All right, so I hope the video helps. Please leave a comment, like, share, and I'll see you in the next video. Bye.